Hello, hello. I am just waiting for people to drop in from the waiting room, so I'll give everyone a couple of minutes to do that. And then once we have hopefully everyone in here, we will get going and start the webinar. I am going to be trying something new with today's webinar. We haven't previously used the polls or quizzes feature at all, so I wanted to give it a try. So you guys should see either a notification or some sort of pop-up for a poll. So I'm going to launch that right now if you guys want to answer that. You don't have to, but I am curious to see how it works. Another feature that we do use on every webinar is the Q&A feature. So if anyone has any questions, you should see a button that says Q&A at the bottom of your Zoom window. So you are more than welcome to ask questions as we're going along as well. Okay, since we are past noon, at least in my time, we're going to get started. So, hello and welcome to today's webinar. My name is Camille Blomdahl and I'm the Director of Client Services at WealthTrace. I will be taking you through the WealthTrace Planner today. If you have any questions as we go along, please send them through the chat and I will do my best to answer them after each section. I may hold off on answering some of your questions until the end of the webinar, or I may have to follow up with you via email. And to ask a question, like I mentioned, just click on the Q&A button. And if you guys want to try and answer the poll, like I said, that's helpful to know if we want to use that feature in the future. Might be a fun addition. So we're going to be starting off on the home screen. On this screen, you can get a brief overview of your plan and see how your retirement plan is shaping up. This page will show you how things are looking if the returns are similar to what they have historically been. So the home screen is a static look into the plan projections, and it assumes the rate of return on all the investments are the same every year unless there is a future asset reallocation. You can see the projected investment values over here on the right-hand side at John's retirement and also at Heather's retirement. This value shown here is not the projected value for each of them, but rather the total investment value at each of their retirement dates. These projected balances are shown in today's dollars. And what we mean by today's dollars, also known as inflation-adjusted dollars, is that we have stripped out inflation to make the numbers easier to understand. We often use today's dollars in financial planning as the projected balances can otherwise appear much larger than what they will actually be worth in, say, 20 or 30 years. You can see the projected investment balance at the end of their plan here and the projected net worth at the end of their plan. If we scroll down, you can see the current asset allocation across all of their accounts shown here, which is a great way to quickly view how you are invested. And you can see any future asset reallocations that have been added here, which we will talk more about when we head over to the plan settings and assumptions. In these graphs over here, you can view things like how expenses are paid for in or before retirement, investment balances, how funds are spent, income versus expenses, and net worth. If you hover over these bars, you can view the breakdown of each bar and see more data. You can also click on the legend down here, which will filter out the data, and you can pick and choose what you'd like to view. And over on the left-hand side over here, you can see all the investment accounts that are in this plan along with the balances. The accounts that show a date below the balance are the accounts that are linked through Yodlee, and this date will indicate the last time that the account was successfully updated. We will talk more about Yodlee and linking accounts a little bit later in the webinar. And we're going to go ahead and scroll up. A great feature on this page is that you can play around with these sliders up here. For example, you can change your retirement age and living expenses, your contribution amounts, the rate of return on your investments, along with the amounts spent on goals and additional expenses. If you move any of these sliders, the results shown below will change in real time. So you'll quickly be able to view how changing those will affect your plan. So if we go ahead and spend a lot more, I'll scroll down a little bit, spend a lot more money on Heather's car, for example, you'll immediately see how that changes here along with the graphs as well. We will reset her very expensive car purchase. And you will also see all of these sliders on multiple of the other screens as we go along as well. And before we jump into the plan settings and assumptions, does anyone have any questions? Like I mentioned before, you can click on the Q&A button if you do. If you do not have any questions, that's fine. We'll go ahead and move over here. Okay. So in the plan inputs and assumptions is where you're going to be building the foundation of your plan. On the personal information page, you can input all the basic information about yourself and your spouse or partner if you're adding one. You can input your date of birth, if you're already retired, or your retirement date, your current salary, and how long you expect to live. In the plan settings, assumptions, and taxes, I'm not going to go through every single setting in here, but I will point out a few important ones. You can edit inflation and COLA rate here, and you can also choose to use either this static rate or you can choose to vary inflation and COLA by year, as shown here. You can click on these numbers to edit them and easily add a row or delete a row. I also want to mention that this is an important feature to have in retirement planning, and it will also add to the accuracy of your plan projections, especially in times of volatile inflation. You can input your annual living expenses down here. And I also want to point out here that you should enter what you think your living expenses will be when you are retired. So for example, if you have children at the moment, or if you have children that are living with you at the moment, and you're paying for their expenses, you will want to remove those expenses from your annual expenses if they're no longer going to be living with you when you are retired or you won't be paying for their expenses. These expenses will automatically be adjusted for inflation within the software, so you don't need to update these every time you log in unless you have significant changes. You will, however, want to update your annual expenses at least once a year, along with your Social Security and any pensions as well. Your annual living expenses should include the typical monthly expenses that you have, such as household bills, groceries, gas, utility bills, things like that. Larger expenses such as mortgage payments, car payments, and annual vacations should be added in the goals and additional expenses section, which I will show you a little bit later. You should also leave out any income or investment taxes since the software will deduct those for you. I also want to point out that these expenses will only matter when you are marked as retired in the software. If you are still working and earning a salary, then the software will assume that you're paying for all your expenses using your salary. We have a built-in budget worksheet, which is shown here, which can help you calculate your annual living expenses. You can add up to 3 separate budgets and easily toggle between these 3 here to see how that would affect your plan. You can click on any of these rows to change the expense description and the amount. And you can also easily add a row by clicking here or delete a row. You can also choose to enter varying expenses instead, which you toggle on here. This is meant for those that may be spending a certain amount on annual living expenses in retirement at first and will be spending either much more or much less in the future. These amounts will also be automatically adjusted for inflation in the plan, but you do want to pop in here and update those annually. Okay, so let's go down to the advanced settings. You can select to reduce living expenses by a percentage here when one partner passes away. You can select to have the software assume that you are rebalancing your investments annually here. And if this is set to yes, then the balance of accounts in each investment section will be rebalanced back to their share that existed at the beginning of the year. So, for example, let's say you have two investment accounts in the qualified tax deferred section. The first one has a starting balance of 500,000 and the second has a starting balance of 400,000. The first account is a beginning percentage of 56% and the second account is 44%. Regardless of the growth of these accounts or withdrawals from them, they will be rebalanced at the end of the year such that the first account is once again 56% of the total and the second is 44% of the total. And this does not include Roth IRAs, 529 plans, and HSA accounts. And the idea behind this setting is that most people will rebalance to maintain their current allocation each year. And this is a way to handle this for financial projections in each year. And you can also add up to 2 future asset reallocations in the plan. You can create your own model portfolio to reallocate to, or you can choose from one of ours. We have many model portfolios for you to choose from, and I will show you where these are located towards the end. A lot of people will reallocate their portfolios as they age. Most people will move towards a more conservative asset allocation as they approach retirement to minimize the amount of risk that they are exposed to. And then I also want to point out here that WealthTrace can calculate your Medicare premiums for you and add those into your plan, which you can toggle on right here. This is often an expense that is overlooked in retirement planning, and since the premiums will change depending on your income, it is important to include this. We're going to head over to the taxes section. So you can have WealthTrace estimate your federal income tax for you based on the information entered, or you can manually enter your federal income tax rate here, along with also capital gains tax. And if we scroll down a little bit, down here, you can enter your state of residence, and you can indicate whether or not you will be moving at some point in the future by clicking here, and then indicate the new rate. This is a very helpful feature for those that may be relocating to a state with a higher or lower state tax rate at some point in the future. WealthTrace will also accurately project the state tax rate for those living in a state with a progressive rate. You can add a capital loss carryover down here, which will be applied against any capital gains on taxable investment assets. And if you're not familiar with capital loss carryover, it means that when you've sold investments at a loss, you can use the capital loss tax deduction over multiple years to offset future capital gains. So if you have $50,000 of capital losses, you can offset $50,000 of capital gains, meaning you will not owe any capital gains taxes on those $50,000. Okay, moving on to the investment assets section. This is where you will see any linked or manually added investment accounts. You can change the account name, assign an owner, see the balance here, edit all of the underlying holdings, add contributions, and see the annual return. If you click on this magnifying glass over here, you can see the holdings along with the balances as well. If you click on the pencil icon for any of these accounts, you'll be able to edit all of the account information. So if we click on this one, you can change the account type, add a cost basis, tell the software when this account will be able to be used, and whether or not you want to exclude the account from a future asset reallocation. If you go ahead and click on one of the accounts that isn't linked through Yodlee, I also want to show you that you have the option to edit the underlying holdings. So you can either assign the account, the entire account in asset class, or we can go ahead and enter the underlying holdings, which you can do here. You can input the holdings or input the tickers for the holdings, which will give more accurate projections. And we'll also be able to pull in the daily price file for all of these holdings. Oops, sorry about that. And close out of this. And if we go ahead on and click on, Accounts that are linked through Yodlee will show up here with a green check mark, which indicates that they have been updated upon logging in. And I wanted to give you a little bit more information on why linking accounts through Yodlee is extremely valuable when creating your financial plan. When investment accounts are linked through Yodlee, the investment assets are updated daily, and we are able to retrieve every underlying holding, such as stocks, bonds, mutual funds, ETFs, and more. We also retrieve the asset class that the holding is assigned to, and this allows us to map the holding to the correct asset class within WealthTrace. It also allows us to pull in the historical information for that holding, which is extremely valuable and adds to the accuracy of the projections. We have three sections that accounts will be placed into. In the taxable and tax advantage section, you can add brokerage accounts, Roth IRAs, HSAs, 529 plans. In the qualified tax deferred section, you can add regular IRAs, 401ks, inherited IRAs, SEP IRAs, and more. And finally, in the non-qualified tax deferred section, you can add deferred compensation accounts and annuities. You can also drag and drop your accounts within these sections, which will change the order in which they are used in the software. By moving these around, you can see how this will affect your overall plan projections and the tax calculations, which is important if you have an account with high capital gains. You'll want to drag accounts with high capital gains towards the bottom so that they will be used as late as possible in the plan. Just taking a look at some of the questions here. So Eric is asking about the slider that is used to change living expenses in retirement on the home page. It's asking if he moves it to display $5,000, is that adding $5,000 per year or per month to the expenses already inputted? Or is it changing it to 5,000 in total? It's adding 5,000 totals per year. And the sliders on the home screen are just meant for hypothetical reasons. It's not going to actually change the input unless some of them have the feature where you can save it. But it's just meant for hypothetical, what happens type of scenarios. Jeff is asking, why do my linked brokerage and IRA accounts automatically assign an annual return of 8.2%? So it depends what your underlying holdings are and what asset classes they have been mapped to. So if we look at mine, coincidentally also has 8.2%, if that's what yours has too. It depends on all of these and what the return assumptions are for these individual asset classes that have been assigned. So without looking at the specific account, I'm not sure why yours are showing that as well. But we will go through the asset classes towards the end, and I can show you where to edit those if you would like to. Okay, so you can add your Social Security payments in here, or you can have, you can have the software estimate it for you. We typically recommend that you add the amount if you have it. It's going to be a lot more accurate than just asking the software to estimate it. You can also input if the payments are going to change in the future at some point, which is applicable to those who may be taking their own Social Security payment to start, but will later be taking half of their spouse's Social Security payment when they start taking theirs. So that is what this looks like. And you can also add one or more pensions down here, along with the age of the first payment and whether or not the payment has a survivor benefit and if there is a growth rate assigned to it. And we will hop over this one because it's the same, and we'll go to the additional cash inflows. So in this section, you can enter any type of additional income or additional cash inflow that you may have outside of your normal salary, or any type of income that you will have in retirement. You can enter items such as a future inheritance, annuity income payments, and proceeds from a home sale or business sale. You can add when and how often the cash inflow will occur, and you can assign the income its own tax rate by either choosing one of our tax rates or entering your own. Just like your annual expenses, you should make any necessary updates here at least once per year. In the goals and additional expenses section, you can add any type of expenses that you wouldn't want included in your normal annual expenses. So you can enter things such as purchasing a new car every 10 years, an annual vacation, your mortgage, additional healthcare costs, and more. You can easily make changes to these expenses without having to edit your annual living expenses. And you can add when and how often the expense will occur. You can also tie an expense to a specific account. So, for example, if we take a look at Allie's college tuition, we look under the start age and goal funding row, and we can see that her college tuition is tied to her 529 plan account. Eric is asking, when using the slider to change living expenses as previously discussed, does running a Monte Carlo analysis after moving the slider take into account that change in living expenses? So yes, you'll see the same sliders that we were moving on the home page on the Monte Carlo screen. So I would recommend resetting any of the ones on the home screen and then going to the Monte Carlo screen and moving them around there, and you'll immediately see how it changes Monte Carlo. So, well, we can do a test of that one too. It may just take a minute because Monte Carlo obviously runs a lot of calculations, but we can give that one a try as well. So in here, you can add any assets that you own that you'd like to be included in your net worth. These will not be automatically used to fund any goals unless also added in the additional cash inflow section. Their value will just be added to your net worth. As shown here, you can add items like expensive equipment, collectibles, and property. You can add a mortgage or other loans in this section. If you add a mortgage to the software, the software can calculate your annual mortgage payment for you and add it into the goals and additional expenses section. So for example, for this mortgage, I've entered the loan information here. And if we pop over to the goals and additional expenses, you can see that my mortgage has been calculated and added here. It's actually, yes, it is this mortgage. So now that we have reviewed all of the plan inputs and assumptions, we're actually going to head over to Monte Carlo. And we can take a look at those sliders in here as well if you guys want to see what happens. Only thing is it might take a minute because there's a lot of data in this plan. But before we move the sliders, let's just talk about Monte Carlo in general for those that are not familiar. So Monte Carlo in WealthTrace tells you the probability that you will never run out of money in retirement. We run 1,000 scenarios where the rates of return on all of your investments change in every year. We drill down into every holding that you own and look at the history of the asset class to see what its average rate of return, volatility, and correlation with your other assets has been. We offer the most accurate Monte Carlo result that you can get because we're actually looking at every single holding that you own. WealthTrace is then able to generate a distribution of investment returns, which allows the program to generate a series of varying investment returns every year. When the Monte Carlo simulations are run, the program counts how many times in these simulations that you run out of money. What is shown here is the percent of time that you never run out of money. So the best you can get is therefore 100%. And down here, you can view the worst quartile, the median, and the best quartile. These numbers shown here are the average of the simulations run in that specific quartile. In this graph here, you can see the 1,000 trials that were run, and this blue line here is the median ending investment value in each year. And like I mentioned, we also have these sliders up here. So if we take a look at, we want to add $6,000 per year in living expenses. Let's see what happens to Monte Carlo. I don't think it's going to do too much. We probably need a much more aggressive approach. Let's see if we can make the Monte Carlo result not be 100%. I have a lot of data in this plan. Ah, there we go. So you can change these on here instead, and then you'll be able to see what happens to Monte Carlo. So we'll go ahead and reset that. We don't need to be spending all that much money every year. And then we're going to head over to cash flow. Okay, so in here you can review your cash flow year by year. If we scroll down, you can see your income broken down in sections. So we can see pension income here and Social Security. We scroll down. We can see the salary being used, any cash inflows, the investment growth, the total income investment growth and cash inflows. We can see their living expenses here, all of their additional living expenses that we entered. And then we can see those Medicare premiums being calculated for the two of them here, total expenses. And then if we keep going, we can look at effective federal income tax rates here, along with the marginal and their state tax rate. And then we can also see their calculated required minimum distributions for their future. We will show you the total RMD amount. So if you have multiple IRAs, you can see the combined required minimum distribution here. So this is a great way to view your total RMD that is required. And then you can also click on these headers up here to dig into the data in more detail. You can, for example, view each account year by year to see the balances, projected growth, average rates of return, expenses paid by account, and more. You can also export this data to Excel, PDF, or CSV by clicking up here and then clicking on the little cloud icon to download it. And then the sliders that I just showed you on Monte Carlo are here as well. So if you make any changes here, that will also show you how the data changes below in real time. So in the investment history and breakdown section, you can view historical data on all of your investment accounts and also look at the holdings that are in each account. You can view the asset allocation by individual account or group any accounts together, or you can also view um, the um, the holdings by account type. So for example, if we select retirement accounts, we can take a look at those accounts being grouped together. So we can see the overall asset allocation for those retirement accounts and all of the underlying holdings, down here. So we can see the current balance for the holdings, the percentage of account, and the year-to-date return. I also want to mention, if you guys saw in the email that we sent out for the webinars, we will be doing a way more detailed webinar on this specific screen next Thursday. So if you want to know more about how all of this works, we can we'll be digging through this whole section next week. I will give you just kind of a brief overview today, but I'm not going to go too much into detail. You can see the historical performance for the investments that you own, and you can even compare funds that you own to other funds to see if there are other options out there that are performing better than yours. So if we, for example, compare the SWPPX, which is a Schwab S&P 500 index fund, we can compare that to a Vanguard fund, and then you can see if this is performing better than yours. You can also see the last 10 years of returns, along with expense ratios, much more, but we'll talk about that next week. You can also look at fund fees and turnover, which shows you how much you are paying for all of your funds. So if you select all your funds here, you can look at the expense ratio and turnover and also the fees. Another feature that works if you have linked your accounts through Yodlee is that you can view the transactions for your accounts. So if we look at the last year for this linked account, you can see all of the trades, transactions, transfers, withdrawals, all of that will show up here. And now we're going to pop over to the scenario screen. So these are all of our preset what if scenarios. You can explore things like how retiring earlier or later affects your plan, changes in your living expenses, inflation changes, you can go up and down, delaying or reducing your future Social Security payments. And you can also create your own user-defined what-if scenarios. And here you can combine multiple changes at the same time. So for example, you can run a scenario where you have increased investment returns and inflation to see how both of those combined affects your plan. You can run a bear market scenario and choose a recession over here to see how that would impact your retirement plan, or you can create your own hypothetical recession. And I'm going to pop all the way over to the Roth IRA conversions. So we have a Roth IRA conversion tool, which is very popular. You can select which IRA you'd like to convert from, when to start the conversion, how many years to convert over, and which federal tax bracket you would like to stay under. The software will then tell you when and how much to convert in each year to maximize your savings and reduce your taxes. And we recently did a webinar on Roth conversions. We will be bringing that back. We haven't set a date for it yet, but we will definitely be doing it again. So make sure to register for that when that email comes out if you want more guidance on how to use the Roth conversion scenario tool and also how to implement the conversion in your plan. So look out for that email in the next couple of weeks, probably. And then you can also run reports in the software on your plan. A lot of people like running their plan report monthly or quarterly to have a record of any changes that they've made. You can add notes to your reports, which you can do by clicking yes here and add any notes there. And you can also export your report in multiple formats, such as PDF and Excel. So while we head over to the settings, I'm going to also pull up a sample plan report for you guys, just so you can take a look at that. So just bear with me for 1 second. If anyone has any questions on any of this, feel free to ask now while I go ahead and pull that up, just to give you guys an idea of what it looks like. Okay, here is the plan report. We will also be changing the look of this when we release the new user interface. So this will be getting a, in my opinion, much needed update. So we will be making this even nicer. But there is a ton of information in the plan report. Obviously, all of it is in your plan as well when you're online, but this is an easier view of a lot of the different sections, in my opinion. So you can look at your current investment assets, you know, there were various different screens. And then I want to point out towards way at the bottom. So here you can look at your cash flow. It might be a little bit easier than scrolling side to side, for example. If we keep going, you can also see down in these sections, you can see how your investments are growing every single year. We can view, if we keep going here, how your expenses are being funded, cash inflow. So a ton of data here. It's all in your actual plan as well, but this is just another way to view that. So we'll head back over to the software again. Okay, so before we wrap things up, I just want to show you a couple of these settings in here. So in here is where you can create your model portfolios or make changes to the ones that we have created. You can click on the names and the percentages to make any changes, and you can easily add a model portfolio by just clicking on the Add Strategy button up here, and you can delete any of the ones that we've created by just clicking on the little trash can. In here, you can make changes to the existing asset classes if you'd like to change any of those return assumptions. You can also own your or add your own asset class for things like valuable art, gold, real estate, collectibles. And these are the default rates of return, which you can also change. We do update these periodically. And I also want to announce that we will be releasing our revamped user interface early next year, which means that the software will be much faster and even easier to use. And since my poll seemed to have worked, I think most of you want to see a little sneak peek of that. So let me pull that up in the background as well. And I'll go ahead and show you what it's going to look like. So give me 1 second. Okay. So let me go ahead and share this with you instead. So this is just a quick little preview of the new user interface. It is still in the works. This is a beta site. It is not the official finished site. It will look very similar, but we are making just underlying changes and design upgrades here and there. So it might be a little slow right now because it is still in beta, but this is just an example of what it will look like. We are updating a little bit here and there. One thing that we have suggestions on is maybe shrinking this down. Maybe I'll run a poll with you guys to see if you think we should shrink this down. Is that too large? So we are going through it and receiving a lot of really good feedback, but um, this is just a quick little view of what it looks like. It is much faster. We think it's even easier to use. It looks a lot nicer. So hopefully you guys are as excited as we are. But before we dig too deep into this, I see that I have a couple more questions. So let me take a look at those. Richard is asking, in the what if section, can I model delaying a pension payment in the same way I can show delaying Social Security payments? Not right now, but that is an interesting thought. I will add that to the list of potential enhancements to see if that's something that we're interested in adding. But right now, that's the only preset what if scenario you can run. Victoria's asking if you're retired during the year, where is that salary income retained? It appears to go to zero in personal information. Can you explain a little bit more what you mean? Typically, if you have your retirement date set to in the middle of a year, for example, the software will prorate your salary. So if you have 3 months of salary left over in that year, um, that's what happens. But yeah, explain a little bit more if you can. Charles is asking if this seminar will be available to view in the future, and yes, we will be sending out a recording of this webinar quickly after we're done. We usually do it same day. If we don't have time today, then we will send it out tomorrow. There are also recorded versions of all of our previous seminars or webinars on YouTube. Let's see, I can pull up our YouTube site. So if you go to check this out, I'm going to show you WealthTrace Planning, you can view all of our previous YouTubes as well. Go ahead and share the old one. Okay, so that is it for the webinar as far as the software goes, but I do want to mention all of our various options for customer support. We have a live chat, which you can get to by clicking down here. If there are no live agents, then you can leave us a message and we will get back to you as soon as possible. We also have an extensive knowledge base where you can find answers to your most frequently asked questions. Let me see if I can pull that up. But you can type any question that you have in the search bar in the knowledge base, and any related articles to that question will pop up. We will also be putting together financial planning courses for active subscribers soon. I know we've said this a couple times, but it is something that we're working on. So, for example, we will discuss things like how to determine the best order of withdrawals, Roth conversions, what are they, when do they make sense, how to interpret your Monte Carlo results, and much more. And finally, we also offer expert support sessions with Doug Carey, who is the founder of WealthTrace and a chartered financial analyst. He can audit your plan for you and review all of your inputs with you. If you have any questions, feel free to send them through the live chat, or you can email us at support@mywealthtrace.com, and we will be happy to answer any questions that you have. So that is it. If you guys have any questions, like I mentioned, feel free to reach out. I'll give you guys a minute to ask anything through the Q&A if you'd like to. If you are hopping off the webinar, then thank you for attending. And hopefully I will see some of you next Thursday when we go through the investment history and breakdown screen a lot more. Thank you, Richard, for attending. Thank you, Brian. Oh, I can also share results from the poll since I'm testing this out. But the majority voted yes for the sneak peek of the user interface. I'm sorry for the two that voted no. All right, I'm going to end the webinar now. Thank you to everyone that attended. I hope you all have a wonderful rest of your day. And yeah, hopefully I'll see you next week. Goodbye.